Are housing sales and housing prices expected to rebound over the forecasted period?
Inflation has gone down, and that has an impact on interest rates. It's a safe assumption to say that there is pent-up demand.
How are our mortgage rate trends expected to impact Canada's housing market?
But we're not looking at like a monumental change in the landscape.
Is the rental market expected to ease?
There's probably going to still be very intense demand for rental.
You're listening to In-House, Canada's housing podcast, where we share the latest on Canada's housing market. Hello, everyone, and welcome back to In-House. I'm your host, Joelle Hamilton, and joining me in the studio today is Kevin Hughes, one of CMHC's Deputy Chief Economists. Welcome back, Kevin.
Thank you.
So today we're going to be covering CMHC's 2025 housing market outlook, which forecasts everything from economic growth to house prices and even mortgage rates. But before we dive into that, I do want to let our viewers and listeners know that this podcast is being recorded on January 28th, so about a week before it will go out on our streaming platforms. So I want to start by talking about our economic growth and what are the key economic factors that are going to be shaping our forecast.
Economists usually look at very few indicators, which we would call the vital signs of the economy. So consumer spending, investment, government spending, and also external trade. And those indicators are conditioned, obviously, by a lot of things during a year that, in the end, will give you our GDP, our economic growth. And so when we look at these factors, what's on the landscape right now, we have definitely a context where inflation has gone down, and that has an impact on interest rates. And when we talk about interest rates, people always think of interest rates as they are right now. But we also have to go back a few years to recall that that had a bearing on the decisions of today and even possibly the decisions of the next few years. It takes a while for these adjustments to actually happen. So interest rates is definitely one element. We've seen population growth still relatively robust despite lower government targets. So that should go down, but that's definitely still has an impact on things. We have obviously the lurking trade dispute that faces us most likely this year. As you said, we're at the end of January right now. We're still under the CUSMA trade agreement, so that could be torn apart. We'll see, but that's definitely something that was important for us to look at when we looked at the GDP growth for the next 3 years, obviously.
So our economic outlook contains three different scenarios. We have a low growth, a medium growth, and a high growth. And based on that economic growth and based on those forecasts, we forecast like housing prices, mortgage rates. So can you just give us a quick overview of each of those three scenarios?
Yes, the three scenarios are overwhelmingly based on what we expect may be the range of tariff scenarios that we are facing, in at least a short run, and we'll update that in the course of the year. So in the low growth scenario, we're expecting we would be like 25% tariffs on all goods. We expect, though, in that scenario that it would be relatively short-lived and there would be negotiations that would follow up. But nonetheless, that would entail contraction of the Canadian economy this year, moderate growth, and then stronger bounce back in 2027. Medium growth is more 25% on 10% of goods, and so that would be a bit less impact on economic growth. And then the high growth scenario is we're assuming that very little impact on trade, and therefore we're in kind of a medium to high growth going throughout the forecast horizon. So we have in the last 2 months gone through a lot of pains to consult government agencies, experts on trade, to try and see if our range of scenarios pretty well encompasses what we could be up against. And I think we're quite comfortable right now that no matter what happens in the coming weeks or whatever, one of our scenarios will be able to cover that situation.
So we know interest rates started coming down last spring, and based on our forecast this year, we're saying that they are going to continue to decrease. Is there pent-up demand, like from those that decided not to buy and wait for interest rates to come down? And then if so, how is that going to impact our housing supply?
So pent-up demand, people who are, not buying right now, carrying it, maybe that decision for the future is something that we can't, unless we had a survey, really measure. But we certainly, we assume that there is a considerable amount of pent-up demand. When we look at the population pyramid, when we look at sales growth in past years, what happened with inflation, it's quite likely, I think it's a safe assumption to say that there is pent-up demand. And so that will have different impacts. For example, people who are renters right now, who are renters because they couldn't afford to buy a home, they may be moving into home ownership or condo ownership as well. So that's one movement. And people who are in their current home and wanted to move up, or even people who are moving down. So that will definitely have, most likely, because of maybe slightly more affordable conditions, there will be some of that this year and probably next year as well. The resale market should be probably more of a target for these people than the new market because it's relatively more affordable. And again, as I mentioned before, that transition between perhaps some renters that will become buyers, that was not as much the case in previous years.
So my next question relates to a topic that I think is that most people are interested in, especially our viewers. Are housing sales and housing prices expected to rebound over the forecasted period? If not, why? If so, why?
When we're looking at the conditions right now and the conditions in the coming years, we really have to go back several years, before to kind of look at what were conditions at the time and how has that influenced things going throughout all the way to 2027. So definitely we have better borrowing conditions, not only for homeowners, but also for investors who are looking to perhaps start projects as well. And so that is continuing to happen. We're seeing, for example, as well, getting back to the macro factors, wages are relatively sustained as well. And we're seeing that filter into consumer spending, and that includes obviously home buying as well. So sales activity should pick up. I mentioned before the resale market being more of a target, that we still think that that's the case. And when we look at the situation across the country, we're expecting that markets that are already quite or relatively unaffordable, some would say totally unaffordable, which is your Torontos, your Vancouvers, that activity should be not as maybe, picking up as much as perhaps other centers like Calgary, for example, or Montreal. And similarly with prices, areas where there's already an affordability challenge, that is unlikely to unfold into, increases in the next 2 years. So it's really a question of the regional differences as to where they are right now in terms of the market conditions. And that's where we have that kind of tale of two cities type of thing.
Next, I want to touch on housing affordability, because that's another topic that is top of mind for a lot of Canadians. It's something that a lot of scholars, influencers are speaking about. So how are our mortgage rate trends and recent reforms expected to impact Canada's housing market?
We expect that the decrease in mortgage rates, then you look at fixed versus variable probably be more interesting for people, but that will have an impact. The mortgage regulations will also ease the situation for buyers. We think, though, that these changes will have an impact, but we're not looking at like a monumental change in the landscape. So these are things that will facilitate the situation for buyers, but it's not going to change completely the whole game. We're still in unaffordable markets in many centers of the country, and that is no longer, I would say, an acute problem. It's becoming a chronic problem in Canada.
So CMHC, we released our rental market report back in December, and affordability was not like that. Affordability issue was not just for those who were looking to buy a home or to be homeowners. It was also very clear that renters are still struggling. And Canada's rental market in 2024 stayed relatively tight, even though we saw the biggest supply growth in the last 30 years, I think, if I remember correctly. And that means that, we had a little bit more higher vacancy rates, and then the price jump, or the price of renting, didn't increase as quickly as we've seen in past years. Is the rental market expected to ease over the next year and into 2026 and 2027?
The rental market is expected to ease somewhat, but you can see a common trend here. You're talking about, affordability edging up a bit, vacancy rates are edging up, but the common denominator here is marginal increases. So yes, we'll see some easing in some markets for sure. We've seen, for example, Montreal, very large supply, but demand is still very strong. And even though we are looking at lower targets for non-permanent residents, for example, who are typically renters, even lower targets for permanent immigrants who are also renters for the most part, we presume that there's probably going to still be very intense demand for rental. We don't have, for example, solid evidence of this, but it is possibly the case that in some markets that are very tight, there are probably much more cohabitation as a result of very unaffordable markets. And when the market does ease a bit, you could see those households decreasing in size, but new households, but there would still be renter households. So it could be a bit absorbed that way. So that's something that could happen in some markets that are very tight. So yes, easing, but marginally.
So I'd like to end things a little differently today. I'm going to ask you one question, and I'd like, the first kind of 5 things that pop into your mind. And so my question is, what are the top 5 takeaways from the HMO?
From an economic point of view, so the first takeaway would be that the economic forces are, at the same time, some of them are fueling the economy and some of them are holding back the economy. So we have these opposing forces that are at play. But despite that, overall, we're still in balance, looking at a moderate growth for the economy. So that's number one. Number 2, we would be remiss not to talk about the potential trade conflict that's upon us. And insofar as this conflict is acute or really mild, or insofar as it's very short-lived or long-lived, that will have definitely a bearing on the economy and on the housing market. The important thing to realize, though, is that these things take time to filter into the economy. So a trade dispute this year is not necessarily going to have an immediate impact on the housing market, but insofar as it's a severe one, it definitely will in time. So that's number 2. In terms of construction, well, housing starts, moderate housing starts, but we're still looking at levels that are around the 10-year average. So it's definitely sustained. Condo construction will not be as strong. That's going to be a market that will be definitely pausing, especially in Ontario and Toronto. The resale market will be a target for people who are now ready to buy a home, more choice, more affordable market, rental market, still a market that is a tight market despite some easing. And the fifth point is that there'll probably be something, as every time, that will surprise us in 2025. So we'll have to talk once more when that happens.
I look forward to you coming back and chatting with us when that happens.
Thank you.
And that's a wrap on today's conversation. Thank you so much, Kevin, for joining us in the studio again today and for walking us through the 2025 housing market outlook. You've given our listeners like a great picture of what we can expect to happen with Canada's housing market in the next year. And I'd also like to thank our viewers and listeners for joining us in-house. Did you know we're not just on YouTube? You can now find us on Spotify, Apple Podcasts, and Amazon Music. Don't miss our next episodes for more real, data-driven discussions. If you're learning from and/or enjoying this podcast, please share this episode, follow us, or subscribe. Reach out. Let us know what you think. Thanks for listening, and see you next time.